So, Robinhood just dropped their latest earnings report, and whoa, it's raising some big questions about where the company is headed. On the surface, the numbers look a little shaky, but when you really dig in, there's this fascinating story unfolding about risk, reward, and a huge new bet the company is making. So, let's get into it.
Okay, this is the number that just jumped off the page and got everyone talking. A 34% drop in net income. That is a huge hit to the bottom line. So what in the world happened here? What could cause such a steep fall for one of the most popular trading apps out there?
Here's how we're going to unpack this. First, we'll look at the profit problem itself. Then, we're going to find the main culprit, which, spoiler alert, involves crypto. After that, we'll see how Wall Street reacted, check out the company's ambitious next move, and then wrap up with what we should all be watching for now.
All right, first up, Robinhood's profit problem. Let's just dive right into the headline numbers from that report.
Okay, so what does that 34% drop actually look like in dollars? Well, it means their net income tumbled down to $605 million. And on top of that, their total revenue, $1.28 billion, actually missed what analysts were hoping for. Now, there was one tiny bright spot. They beat earnings per share estimates by 2 cents. But look, let's be real here. The overall picture was definitely not pretty. And this leads us right to the heart of the matter, to what I'm calling the crypto culprit. We got to pinpoint exactly where this slump came from. Right, so what was really behind this profit drop? I mean, Robinhood has a few ways of making money, but it turns out one specific part of their business has this outsized, massive impact on their bottom line. And to understand that, you have to get this key idea, the swing factor. It's just a part of the business that can cause these huge, kind of unpredictable swings in a company's results. For Robinhood, crypto is that factor. It's like a wild card in their deck. When crypto is hot, Robinhood's profits go through the roof. But when it's not, well, you get a quarter just like the one they had. And hey, you don't have to take my word for it. Just look at the data. Crypto trading revenue absolutely plummeted, down a staggering 38%. Meanwhile, there are other stuff, stock and options trading, basically holding steady. This just shows you how deeply Robinhood's fate is tied to the crazy, volatile crypto market. And this wasn't just a Robinhood problem, It was a crypto problem. Their revenue slump lined up almost perfectly with a huge sell-off in the digital asset world, where Bitcoin's price dropped about 30% from its peak that quarter. When people get spooked by crypto prices, they trade less. It's that simple. And that hits Robinhood's revenue hard. So the numbers are out. They're not great. How did Wall Street take the news? Let's look at how the people with real money on the line responded. Well, the market did not like what it saw. Not at all. In after-hours trading, right after the report came out, the stock tanked 7.1%. That's a huge, clear signal of just how worried investors are about the company's reliance on that crypto roller coaster. But when you zoom out and look at the stock's story, it gets kind of weird, almost contradictory. On one hand, you've got this super high PE ratio over 35, which means Wall Street is expecting it to grow like a weed. But then you look at its performance this year, it's been a disaster, down over 25%. But then you zoom out again to 1 year, and it's up over 50%. What this all really means is that investors have priced this stock for perfection, which puts just immense pressure on Robinhood to find that next big wave of growth. And all that pressure, well, it's forcing Robinhood to make a big move, a strategic pivot into a totally new market, now that crypto has proven so unreliable. So you gotta ask, right? What's the game plan here? How are they going to find a new growth engine when their old one is just sputtering out? Their answer is something called prediction markets. Basically, it's a business that lets you trade on the outcomes of real-world events. We're talking everything from sports to politics. Think of it like this. Instead of buying a stock in a company, you're placing a wager on whether or not something specific is going to happen. And make no mistake, this is not some tiny little side hustle. The scale here is already gigantic. 12 billion. That's how many of these event contracts were traded on their platform last year alone. This is already a massive business, and clearly, Robinhood sees it as their next frontier for high-speed growth. And the company's CEO, Vlad Tenev, he is all in. He's basically screaming this from the rooftops. He told analysts, "We're just at the beginning of a prediction market supercycle." I mean, that is a bold, bold claim, and it shows they are fully committed to making this their next big thing. Okay, so they're making this huge bet.
what should we be looking for now to see if this new strategy is actually going to work out for them?
Well, if you're an investor, you've got your eyes on a few key things. First, has the crypto chaos finally stabilized? You also want to know, are they still bringing in new people, or has that growth stalled out? And beyond that, are users sticking around? Is the company keeping its spending in check? And maybe most importantly, what's the next update on this big, ambitious bet on prediction markets?
But here's the kicker. This is what's so fascinating. Despite this really shaky quarter, Wall Street analysts are, surprisingly, still incredibly bullish. Right now, you have 32 buy ratings on the stock, just 3 holds, and zero analysts are telling people to sell. It seems like the pros are looking past this rocky quarter because they believe this big move into prediction markets is actually going to pay off. And that's really where we're at. It leaves us with this one giant question. Robinhood is caught between this incredibly volatile past and a really ambitious future. Is this huge, risky bet on prediction markets going to be the thing that finally gets them off the crypto roller coaster and makes Wall Street truly believe in them again? I guess only time will tell.